Good morning. You're watching the market right here on 80 now, and we're almost counting down to a week's close. And what a wild week this one has been, right? But yeah, yesterday we breathed a little bit of a sigh of relief while HDFC Bank continued to drag, and there were a lot of stock-specific reactions coming in. The Nifty managed to hold on to that 21,450 thereabout mark. So we did recover from that 3-week low that we had day before. While banks underperformed, HDFC Bank, at least the ADR overnight, has managed to close in the positive, so finding some support at least. So the culprit is tackled with.
So Ayesha, yesterday markets fell and FIs were selling, and HDFC Bank did not fall flat, which means they're selling irrespective of HDFC Bank. Yeah. Now let's just look at the chart of this year. Very simple chart. इस साल निफ्टी में क्या हुआ? Let's look at that. Very simple chart, nothing very complicated about it. Now, why am I insisting that we should look at that chart? Now look at Ayesha, the market. I mean, isn't it like a mountain, right? First you rallied 500 points and then you came down by 600 points. So is the best part of the rally which we saw in the first week of Jan, is that over? And now is the Jan seasonality at play? I think the Jan seasonality is at play. Purely the fact that markets are reacting and overreacting to bad news. They are not really cheering, good news per se. FIs have been selling, and there is a big departure in what everybody thought would be the FI flows versus where they are. 2 days of selling. I mean, everybody blamed it on HDFC Bank on Wednesday. Okay, that was a debacle, and that's why FI sold their favorite stock. But no, Thursday also the selling from FI was actually intense. What is the point I'm trying to make here? The point I'm trying to make here is that is this typical Jan seasonality which is at play. FIs are selling. The start was great, but the follow-up is not missing. Are we staring at more downside, or markets are likely to find their feet at this current juncture? But one thing is evident, that never say never in the market. Just when the general assumption was that FIs will buy and they will buy and they will buy and they will buy more, and they're not done. They will buy even more. They've started selling.
Yeah, and speaking of that, let's just talk a little bit about the kind of reaction that we've seen, in fact, when it comes from the FII and DII community overall when it comes to individual stocks. And this is pretty interesting because we're assessing individual stocks and the kind of reactions that we've seen to some of these. That's the overall month-to-date data that we've seen for FIIs. But let's analyze HDFC Bank, for instance. And yes, indeed, there hadn't been a great set of numbers that the company that the stock delivered, but the stock hit a 2-month low intraday. It was below all of the key DMA levels, and in 2 trading sessions alone, it raised nearly 1.3 lakh in terms of market cap. That's HDFC Bank. Polycab, we all know the story. Yes, there were 1,000 crores of unaccounted cash sales. There were allegations of that. The company denied that. But take a look at the stock. It fell nearly 28% between 9th and 12th of January alone. And then on the 12th of Jan, it recovered nearly 13%. And then there were reactions like an ICICI Pru. What really, Nikunj, is that telling you in terms of the reaction that we've seen to individual stocks?
See, when markets react and when they overreact and when the reaction is very amplified, that just tells you the fabric of the market, and that just tells you that markets in a sense are either hollow, or the follow-up or the market mood is such that, or the valuations are such that the reaction is going to be extreme. What we are seeing right now are extreme reactions, whether it was on Polycab or on HDFC Bank, or what happened to, let's say, what we've seen in terms of ICICI Pru Life. Initial set of numbers, but the market reaction is just telling you that the reaction is going to be very amplified. Similarly, wherever there is great news, wherever there is good news, the reaction is also amplified. Look at Infosys, look at what happened to Wipro. So the market is actually moving into this extreme zone. Has HDFC, I'm using that as an example, has HDFC earnings been cut by 15%? No, but the stock fell by 15%. Has Wipro come out with something extraordinary that the earnings then need to be upgraded by 15%? No, but the stock saw that kind of a reaction, and extreme reaction is never a good sign. This time the extreme reactions are on the downside more, on the upside less, but the point that there is an extremity which is coming in the market is there. And extremity in the market always gives you an indication that markets in a sense either are anxious, or traders think that, or they are bloated, or there could be volatility. So, extremes on both the sides, it's not great. And right now, just look at you give October, November, December, all the bad news was ignored. Right now, suddenly you get a sense that people who hunt for क्या number अच्छा आने वाला है. Now they are trying to understand क्या number खराब आने वाला है. So that's a departure. All I'm saying is seasonality has kicked in. I'm not saying that okay markets are going to just fall in a jiffy. You still want to buy the market. But that buying point according to me is closer to 20,000 or 21,000. It's close to one day of panic in the mid cap, 2-3 days of when markets languish closer to the support levels, buy there. Aram se. Don't be in a hurry.
Yeah, and considering you've got so much of the index weightage still to report its numbers, we are only done with the large IT heavyweights and HDFC Bank, but you've got Reliance today, you've got ICICI Bank, Kotak Bank tomorrow, you've got Unilever, you've got UltraTech. So all in all, between Reliance and ICICI Bank itself, we're looking at a good 17.5% of the weightage on the index. And of course, given that tomorrow is also a trading day, we'll see all the reactions to Reliance tomorrow itself.
And that's a tricky one, Ayesha, because, when you typically Reliance numbers come out on Friday and markets react to them on Monday, and Monday is actually a full market and Saturday is a half market, but Reliance will move, market reaction would be there. So actually, thank you for prompting it. I just realized that the reaction is going to be extreme.
Yeah, tomorrow itself.
And I don't think institutional investors really would be at play. So hard to call how markets would be reacting, because on Saturday when markets would be open, I think ICICI Bank will also come out with numbers.
No, ICICI Bank would come with numbers in the second half of the afternoon, and the market trading hours are till 12:30.
Yeah, so then market reaction comes on Monday.
That.
Still, there's Kotak and ICICI Bank
both
tomorrow,
Kotak and ICICI Bank will be post.
But Reliance numbers would be coming tomorrow. Okay, now let's look at the scenario. Irrespective of tomorrow's trading session, if numbers come out, if Reliance numbers are not great, then there's another heavyweight which in a sense could be under attack. And then you got ICICI Bank and Kotak. So it's imperative that after what we've heard from HDFC Bank, we don't get similar kind of a setup scenario from other private banks. That's part one of the story. Part two of the story, Reliance reaction, crucial, but tomorrow is going to be the difficult one to call in terms of market predictability. So hold numbers for next 2 or 3 days for the health of the market, given the scenario and given the setup and looking at the market reaction, I think would be there. If Reliance numbers are great, I think upside is limited. If Reliance numbers are bad or marginally, then downside opens up. That's a problem.
Yeah. So it will be critical, but that's what we're anticipating in terms of the overall results calendar, a whole host of numbers that will be declared between today and tomorrow. And in fact, when we're looking at individual, the strategy on individual stocks, and particularly when it comes to those overowned PSUs, would the strategy be to avoid, Nikunj?
I think it's time to avoid PSUs now. See, you have to look at it this way, that if the market in a sense is in a mood where upside is capped, FIs are selling, markets are reacting to bad news, you must recognize that PSUs is the space where the action, excitement, the retail activity and the HN activity is very large. So if market is looking for a point where there is profit to be taken off the table, where valuations are really stretched, I would say it's PSUs. Now, PSU in general, I'm using that as a category. We'll talk about themes as the show goes on. But you want to avoid PSUs right now. Given that PSUs have seen a run up, given that the market is weak right now, and the momentum in the market really seems to be there. One becomes two in real life, but in financial markets, one can become 10. Why am I saying that? Is because earnings always grow up gradually, but markets move up in a linear manner. Now that adjustment has to happen. Either earnings have to catch up, or markets have to come down, or markets will remain there. That is my limited point. That markets are here, earnings are here. Now, either markets have to come down, earnings have to go up. So, for markets can remain here, but for that, you have 2-3 more quarters when you catch up. Now, that catch up is what you call as volatility, and investors will call, trader will use the word volatility, and investors would say this phase is
opportunity.
Patience.
Yeah. Okay, let's understand the global setup. There will be a lot of stock-specific action, in particular Polycab, because the earnings came by during the fag end of the market hours yesterday. Unfortunately, Polycab is in an F&O ban today. The growth numbers weren't as impressive, which is why you had the stock fall down. Eventually, of course, it settled in flat. But at the lows of the day post the earnings, the stock was down about almost 1.5% from the top of the day. And yeah, more importantly, the management has cancelled their media interactions. They were supposed to speak to the media after the numbers. So I think that's going to be a very, very sensitive stock today. We'll talk about all of that in just a bit. First, to Vinny to understand what the global mood is like overnight. Vinny?
Good morning, Ayesha. And taking the commentaries that we're seeing globally overnight, Fed's Bostic is highlighting that, the Federal Reserve Bank will actually start taking rate cuts in the third quarter of this year. He's further adding that inflation is now moving to a level that Fed is comfortable to, moving to the 2% target that they have as well. And obviously, in terms of inflation, as well as that will be something that will be prompting, if inflation comes down, that will be prompting growth as well. And employment is something that is getting closer to the Fed's levels that they want as well. So yes, rate cuts expected, but third quarter of this year is something that when we could expect rate cuts coming in is what Bostic is highlighting. Other than that, we have commentary coming in from Morgan Stanley CEO Ted Pick, who's expressed the confidence that the bank will actually be hitting the financial target of $10 trillion in client asset and 20% return as well. Keeping his strategy from his predecessor is what he'll be focusing on as well. So that's the word from him. And lastly, we have commentary that's come in from Bank of America CEO Brian, who's highlighting that he sees 4 interest rate cuts coming in 2024 and 2025. And he believes that that will be taken by the Fed this year as well. And obviously, he's highlighting that they may actually see a double middle market bankers over the next few years as well. So key commentary coming in from some of these important global commentators.
Okay, Vinay, we'll leave it at that. Let's welcome on board Kunal Naresh as well and try and understand what the trade setup is looking like this morning. Kunal, hi morning. Not all that bad yesterday. Overnight, you've got the HDFC Bank ADR finally settling in the positive. But then again, today you've got Reliance and tomorrow you have market open. So, we'll see all sort of varied reactions today.
Yeah, but I think net Nifty index still remains into maybe a 200-300 point odd band even after such kind of expectations in terms of large cap results. I would still believe that that's a good sign, especially given the fact that we've already corrected more than 600-700 points in the last 3 trading sessions for the index. Now, the only good sign which we saw yesterday emerging was stability around the 21,500 mark. There was mild bit of put writing which had come back at 21,500 levels for the index. Even though we closed below this on the spot basis, but that indicates that we may try and claw back about 21,500 mark, and there could be a strong attempt towards defending this strong support level for the index over the very near term. However, for the bank Nifty as well as for large cap private sector banking names, there seems to be evidence of fresh mild shorting for many of the private sector banking stocks. So we need to see whether we go into a phase of short covering or whether these stocks get into a tepid bit of a bounce. Net, I would believe the index still remains into could probably still remain to a range 21,500 for the Nifty and closer to 46,700, 47,000 odd for the bank Nifty.
All right, let's get in Naresh's take as well on the markets. Naresh, after what transpired yesterday, down 0.5% at 21,462, what's your take on the strategy?
So yesterday, what was interesting is the fact the recovery in the small cap and the mid cap indices. At one point of time, we had opened in the positive for the small cap index, even with a gap down in the Nifty. And in the next 30-40 minutes in the starting of the day, we saw a 2.5% cut across the small cap and the mid cap indices. And by end of the day, we were almost on the positive territory for the small cap index. So that tells you there is a lot of support which is coming in the broader markets. As of now, the fall, majority of it can be attributed to HDFC Bank. So for now, what we need to see is if we hold on to the lows of yesterday, till that point of time, the bias remains positive on the market overall. We may get into a range bound move wherein 21,300, 400 on the downside, 21,800 on the upside could be a range bound move for the next couple of weeks possibly. And we'll in that period see all result reactions where majority of the results should get done in this period. So time now for one to be a little more defensive than aggressive given the result week as well as the markets getting range bound.
Let's talk about individual stocks then. Kunal, what's on your list?
So I'll focus on a mid-cap name, CESC as the first stock, which yesterday also closed at the high point of the day. In fact, it was very close towards the breakout of the previous major swing highs of 140, 141. So would suggest a buy with a target of 166. Stop loss could be kept at 132. And the second would be a buy on Bank of Baroda. The stock has been beaten down, I think from 238, 240 levels approximately to now sub 230 mark. But I believe that on the short-term basis, specifically on the intraday charts, it's forming a bullish pattern. So expecting a mild recovery for Bank of Baroda, targets of 238, stop loss at 222.
Right. Naresh, what's on your list in terms of individual names?
First is the buy on Tata Communications. The stock saw good price volume action post the numbers yesterday. It was consolidating in a very tight range, so seems like a short-term breakout done. Stop loss at 1720, target price of 1900. Second is a buy on Petronet LNG. The stock has been a one-way mover slowly and steadily from those 190, 200 mark where it had seen a gap down. It's recovered above the gap down prices, very close to new 52-week highs, and has been showing a lot of relative strength over the last few weeks. Even in the short term, it's given a flag formation breakout yesterday. So expecting momentum to continue. Stop loss at 232, target price of 260.
Let's talk about some more individual names, and Anisha joins in to flag off exactly that. Anisha, hi, morning. What was IndusInd Bank's scorecard like?
It was broadly in line. There were, of course, a few misses as well, but I'm guessing the street might take it a bit more positively versus negatively. At least the brokerages seem to have upgraded their target prices as well as some of the estimates, so I'm going by that. Now, overall, in terms of numbers, the NII was up around 18%, bang in line with our expectations. The pre-provision operating profit was also up around 10%, and overall profitability jumped up by around 17%. The advances and the deposit growth rate continues to be quite healthy, though for deposit, it was up just around 2.5% quarter on quarter. So there are parts of the street which are worried about that. As far as the deposit growth is concerned, CASA was also steady at 38.5%, though it's of course off on a quarter on quarter basis. The asset quality was something which was worrying the street a bit because the slippages figure was a bit higher. The gross slippages came in at around 1,765 crore. Management had indicated that it could be closer to 1,200 to 1,300 odd crores. So there was a bit of a negative surprise there. However, they did mention in their commentary that it's a bit of a one-off. Overall, the slippages remain under control and they will normalize from here on. The other slight negative was that the company has used up its contingent provisions for another quarter. So that's something to watch out for. Overall, in terms of the cost to income, they've guided that it's expected to come down to 45% initially, and from there it will come down to 41 to 43%, and the ROA, ROEs are also expected to improve going forward. Overall, the book value per share currently is around 1.8 times to 2 times depending on, of course, your estimates. But overall, Nikunj, looks like the street has given it a thumbs up. Of course, it's not going to be a big beat, but after HDFC Bank, the expectations were muted. So maybe purely on that.
Sinisha, everyone thought that HDFC Bank numbers are more like a macro event. That's like a canary in a coal mine, that's an harbinger of what would now hold true for the entire banking sector per se. And what was that communication from HDFC Bank? Liability, war of liability will continue, and they will be forced to slow down growth. Now that really seems, that is not the messaging from IndusInd Bank. I would look at IndusInd Bank in two ways. First, the quarterly numbers. The slippage part, yes, it is slightly above, but that's manageable is what the management is saying. So let's take that part out. Second, are they steady? Well, they are steady both in terms of maintaining the return ratios, and they are growing at about 20%, which is much higher than the industry average and a very decent and a very respectable number at that kind of a base level. C, the valuations are not really stretched. Then, if one looks at the trajectory for IndusInd Bank for 4 quarters now, Sumant Katpalia and his team, they managed to keep the trajectory higher. What is the higher trajectory for a bank? NPA is low, cost to income ratio coming down, and growth, which for me has to be closer to 18 to 20% without raising capital. That's a decent combination for anyone to have. Now, you can't kiss goodbye to the Indian banking sector. Yes, there are going to be push and pulls which will happen, and I think IndusInd Bank in last 1 year has done very well. You may not see too much of market reaction to these numbers. I don't expect a bout of short covering also, because the stock in a sense did not see that kind of an F&O built up. But for a stock which a year ago, Anisha, everyone had written it off, I think it has done rather well for itself when the banking sector purses down. And I think the steady outperformance here to stay. My sense is, looking at the numbers, that we are in for more earning surprises rather than earning disappointment. I think for HDFC Bank, it's the other way around. So, with banking stocks, Anisha, you always have to understand that banks is a cyclical business. There are times when some banks do. There was a time when HDFC and Kotak did fantastically well. There's a time when ICICI Bank did fantastically well. There's a time now PSUs did very well. My sense is that IndusInd Bank and an Axis Bank, I think they're that curve now where you will actually see more upgrades and less downgrades.
Okay, and talk about howlers. If you think HDFC Bank was bad, Metro Brands. Just about everything is wrong.
Yeah, and I'm worried the kind of punishment that the stock markets are giving to bad earnings, whether Metro will be the victim of that or not today, because clearly they deserve a bit of that. Definitely, it was an all-round miss coming in. Yes, the revenue was up around 6%, but it was 9% lower versus the consensus estimates. Even if you look at the margin performance, that also declined. The margin this time declined almost 300 basis points year on year, came in at 31%, and the overall EBITDA declined by 3%, resulting in a 70 basis point miss when it comes to the expectations of some of the analysts. As a result, no surprise then that the profitability was a huge miss. The adjusted profit came in at around 97 crores, which is a decline of 13% and a miss of 17% on the bottom line. So that's the kind of underperformance that we have seen from Metro Brands this time. And of course, it was that negative, operating leverage that was working its way to the profit of the company. They have, shut down some of the FILA stores as well. The Gravitex loss is around 8 crore rupees, and the e-commerce sales also came down quite a bit, and the company said that there are some issues in transitioning to new order management and warehouse management, and that's the reason we saw all of this. But the P multiple of the stock is not cheap at all, over 60 times. I wonder how the street will react.
You know what amazes me is that how can things change in a quarter so much? I mean, it's not that Indians are not buying new shoes. It's not that brand has changed. It's not that there was something negative which happened in terms of a brand recall. But what has changed in between quarter, which was supposed to be a good quarter? I mean, the initial numbers which we got for hotel, tourism, travel, for everything you do, which is outdoor, you need a shoe. So I'm just amazed that what changes.
The bigger worry is that Metro is one of those specific stories which cuts across the bands, right? It's got a rural as well as urban exposure. So what was challenging for them? Because right now we've been talking about the K-shaped recovery, urban consumption at a high. Is this a precursor, or is there a sign of things to come for urban consumption? Is a story?
It might well, Ayesha. I mean, you're absolutely right. I mean, you look at, markets always move in extremes. Sometimes it's price, sometimes it's opinion. The opinion is that luxury will keep on doing well, rural will never recover. That's the theorem which markets are working with. And I think with Metro shoes, that in a sense becomes the near-term challenge, because expectations are high, valuations are high, and the near-term miss, what Anisha said, is absolutely right, that markets are no mood to give you a year. They are just punishing the stock. They're selling the stock and then they're understanding. In numbers,
what went wrong?
Exactly.
Yeah, but even some of these end of season sales, the data indicates that it was very muted this time around. So I don't know if there's an overall change.
We're talking in one of the edit meetings that look, online urban retail is slowing down. There is evidence which you're getting, let's say, from the Flipkarts and the Amazons and the Mishos of the world, that look, there is a slowdown which has started coming in. And this is something which I don't think markets are prepared for. See, the hangover, which I call the Santa Riley hangover, I think is getting over. It extended itself from December to the first week of Jan. Now reality is coming back.
Okay, thanks Ayesha for taking us through those stocks in news. But as we take a quick break, I had an exclusive chat with a rare startup that's PharmEasy. Siddharth Shah, the CEO, said that Thyrocare was a perfect fit for the company. From the peak valuation of close to $5.5 billion, was there like a 90% mark down to close to $600 million?
The rights issue that we did was closer to $500 million. Almost all of our large shareholders have participated as part of the rights issue. At the end of the day, all our shareholders will be rewarded for their trust and faith.
There are rivals within this space, be it 1MG owned by the Tata Group. There's, of course, Reliance on NetMeds. Tell us about how your market share has been affected or impacted on the back of this.
All these digital players or new age players who are promoting digital, accessible, affordable healthcare, all of us put together are barely scraping the surface. We are all below 10%, right? And sometimes we go ahead, sometimes they go ahead. We've just come out with our FY23 numbers. We are well north of 6,000 crores in terms of net revenue, right? I think that clearly puts us in a phenomenally large position.
Back with the market, right here in 80 now, the GIFT Nifty is indicating that it's going to be at least a flat start with a bit of a positive bias for us. Unfortunately, the HDFC Bank ADR overnight, which has been really the sentiment precursor the last two trading sessions, that has indicated a recovery of a good 1.5% in the green. But back home, lots of cues in stocks and news-specific news to discuss. And the Reserve Bank of India has released its January 24 issue of its monthly bulletin. The report underlines the potential long-term impact of significant and persistent fluctuations in food prices on overall inflation. Remember, December witnessed an uptick in inflation, primarily fueled by rising food prices, prompting policymakers to address the implications of such shocks. My colleague Ankur Mishra is joining in with more details on the same.
Yes, an important message coming from Reserve Bank of India bulletin as far as GDP growth is concerned. One of the articles says that we must aim at 7% GDP growth. Remember, even the Reserve Bank of India Governor Shaktikanta Das has highlighted we should aim for 7% GDP growth in FY25 as well. As far as the current year's guidance is concerned, the Reserve Bank of India had already increased that forecast from 6.5% to 7% in the last monetary policy. In fact, Reserve Bank of India Governor has also said that the growth momentum which has continued so far shows the resilience of the Indian economy, which has performed well if you compare with other global peers. Apart from that, as far as inflation is concerned, it has been reiterated that 4% target should be met on a durable basis, not as one-off incident. The article also focuses on how the banks should be focusing on the risk in the retail assets. Remember, there was an action which was taken by the regulator against the unsecured retail assets, and banks were asked to increase the risk weights there. Now, there is a kind of a warning in the Reserve Bank of India's bulletin that the retail assets should be monitored closely and risks should be washed out here.
Thanks very much then, Ankur, for giving us that heads up on the RBI monthly bulletin. Meantime, we'll be putting the spotlight on Tata Communications just to talk a little bit more about how this time around the EBITDA break-even has eluded switch. We wanted to understand as well what the outlook is in terms of their growth guidance, whether or not we are going to actually see this double-digit growth in the medium term or not. Remember, revenue scaled up 15% in the quarter gone by. The net profits, though, tumbled nearly 80% to come in at 45 crore rupees, with margins about flat at 20.1%. We have Amar S. Lakshmi Narayan, the CEO of Tata Communications, with us on the show. Thanks so much for taking time out. So the numbers in Q3 have been a big beat as compared to what the street was penciling in particular on the margin front, and that's largely owing to Kalera. What really led to this surprise profitability? What were the synergy benefits and the underlying growth?
Yeah, first of all, I would like to call out in two separate tracks. I think last quarter we said that our core business without the subsidiaries was holding up at the 23% mark. We have this quarter improved further on that marginally. The other point to call out is, as you said, Kalera. We had planned a set of activities for delivering on all the synergy tracks, and we had just fast-tracked some of the activities in the cost synergy track, and so that we can take the benefit of some of the low-hanging fruits that were there. So I would say a combination of very disciplined execution on the overall business, and particularly with respect to the integration activity. And also on the switch, some of the losses have been narrowed down sequentially. These are the ones that have contributed to better margins.
Right. Though Kalera has turned out to be profitable, Switch is still away from EBITDA break-even, right? Firstly, by when do you expect Switch to break even? And secondly, when will Kalera profitability and will it sustain, you think?
Yeah, on the switch, as I said, it's narrowing down, and we are on our path to make it break even. So the execution of that is going very well. So some of these cost synergies are, there are some low-hanging fruits that you can take out. Some of them will take a longer time to execute, and we are executing on those. And the same thing will apply to Kalera as well, right? So I think we have taken some of the immediate low-hanging ones that we could. But there are many more things to be done, including investment in Kalera to make the platform more intelligent. Those are investments that we need to make. So we will be calibrating all of that, and we will execute on all tracks, because these integrations are complex. There are cost synergies, there are sales and revenue synergies that we have to extract, where there are teams in some of their accounts are not at Tadacom accounts. We have common accounts, and vice versa as well. So we need to work on those. And ultimately, we need to bring all the product and the platform synergies and integrate tightly, even culturally. So which all will take time. So we have a very a clear plan on executing all of this. We have a good set of team and leadership for these integration activities and for the units. So we'll be executing on all of those.
And the data business as well, the organic revenue was flat on a sequential basis. Should we look at this going forward? What kind of growth shall we pencil in?
So the data growth, and especially the digital data, historically, if you go back, the digital data 2 years ago was in a low single digit, and overall data growth was in a low single digit. I think we came off that trajectory and started to grow in the double digit, and our overall YTD digital revenues are still healthy, given the broader macro conditions and the slowness in the decision making process internationally, particularly. So, given those circumstances, we are quite happy with the kind of growth that we have seen. But in the medium to long term, we believe with all the investments we have made across all our portfolio of the digital fabric, whether it's the connected infrastructure on the next-gen connectivity, and next-gen connectivity, for example, is well over 30% in YTD basis. So there are pockets of these which are doing very well. We just need to make sure that as the conditions improve, we continue to participate in more number of opportunities, which is why we increased our footprint and sales force in the markets. And we'll continue to do that and participate more. And when the conditions improve and the decisions get taken, we will be there to reap those benefits.
So you think you'll clock at least double-digit growth rate over the medium term?
That's what we are aiming for, and I think the YTD growth, as I called out, is in double digits. Combining with the switch and Kalera, definitely double digits.
Okay. On margins, we've seen a slide from 26% to now 20%. I know you had prepared us for this drop on account of the acquisition impact, but now going forward, how do you see the recovery in margins, and where do you see FY25 margins to come in at? Any range that you could give us?
I don't want to give an FY25 range, but we have said that we want to be in the 23 to 25% EBITDA range, and there's no reason to deviate from that. I explained in the past that the reasons for the drop in margins, and as you said, we had prepared the market because it's well in line with our strategy. As we increase our digital portfolio, compared to the core connectivity, which had a high EBITDA margin, the digital portfolio has a lower EBITDA margin, but with lesser capex intensity. And because of the revenue mix, we are seeing this effect of the margin fall. But each of the digital portfolio and each of the digital products have a glide path that will take us, which will leverage the operating leverage and the investments that we've made. And as they improve, we will get back to the 23 to 25%. And that is what we've said that we will do that in the medium term.
And the cash conversion, that's weakened in the past couple of quarters, and that is driving your net debt higher compared to the acquisition cost. Is this something that's worrying for you? Is it because of the delayed decision making maybe, or perhaps the delayed payment from the customer side that this can be attributed to?
No, I don't think there's any late payments, and we don't have any concerns on that. The cash conversion is a factor of largely two things. One is the EBITDA to the PAT levels. One is the effective interest rates going up with overall debt levels going up, and that is a factor. And the second is we also had some other income like the tax returns and others that we had, which helped us to improve the PAT in the past. But on a recurring basis, we don't have any concerns on where we are and where we need to be.
All right. Thank you so much for taking time out. Good to have you on board, understanding a little bit more about the quarter gone by. Let's welcome on board then Sanjeev Bhasin, who's joining in on the show. Sanjeev, I trust that your health is a little bit better. It's about 19 degrees, I think, in Bombay, and I'm freezing, so I don't envy you at all.
19 degrees. Yeah. Good morning, Avanne. So I made it back to the studio because my throat is still a little sore. It's not the cold; it's the little bit of the throat which has got caught because of the little viral. But I'm much better. Yes, it's 7 degrees even at this time. So superb weather, but the throat has hurt me. And luckily 2 days rest also meant that the market had to take its turn. So back on track. I think we've had a healthy correction, which was much warranted. And now we look to be again headed higher.
मार्केट्स में भी ठंड लग रही है जी, थोड़ी सी फॉगी हो गया.
गुड मॉर्निंग निकुंज. बिल्कुल थोड़ा फ्रॉड था 22,000 पे, और वो अच्छा है कि क्लियर हो गया. But some reactions are bull market reactions are sharp, fast, and ferocious. So you remember, if you have your buying list, this is the time to put your money. I'll just give you a note. With 3,000 points on the bank Nifty may be slightly unwarranted, given that credit is expanding. The US is definitely headed for a soft landing, and even if there is mildly higher yields, I think the return on equities will be very, very fast and superior. और आपने देखा ये IT, pharma, all adding up. So I think banks is where you should be putting your money. By the way, yesterday I heard the RBI governor sitting at home, and he said, we have no limit on CD ratios and XY. This is all media hype. So I think most unwarranted, the excessive sell-off in HDFC Bank, it could be a long-term buying opportunity. But, do your checks and balances. Small banks are coming out with superb results. Last year, my top pick, South India Bank, 8 rupees is 31. Today, I'm going to give you a New Year pick, which is going to be a small bank which can double in the next 1 year.
Bhasin Saab, I'm going to take that point forward. CLSA note in my hand. Client feedback. CLSA client feedback, which means what CLSA has spoken to the clients. We interacted with over 20 clients since HDFC Bank results on Tuesday. While most domestic clients were unhappy with the results, we feel that it was slightly different for foreign investors, who many of them believe that we are at the near end of the EPS cut cycle. Now, you have to look at HDFC Bank. It's an institutional dominated stock. And it's a stock where near term what institutional investors, they decide it will happen. If you're an outsider investing into India, you've enjoyed a glorious journey with HDFC Bank. And if you're sitting in overseas market and looking at growth, when you compare that with what is happening in US banks, European banks, the whole appeal of HDFC Bank, even at a 12-13% growth with this kind of a book quality, I think is great. If you're a domestic investor, suddenly you would say, okay, I can buy not just HDFC Bank, I can buy other banks also, and that's where growth is better, valuations are better. Foreign banks or foreign investors will never buy PSUs. Domestic institutional investors are buying PSUs. HNIs are loaded in PSUs. I'm talking PSU bank. So that is the difference in terms of the mindset. My sense is that sooner than later, HDFC Bank will make a base. And when climatic falls of 10-15% happen for large cap stocks, historically they marked a market bottom. We're first looking at where the bottom will be made, maybe some time bias correction after that, and then it could be back to mean reversion. But for the moment, I think sooner than later, HDFC Bank actually will find a base. Basin Saab, yes, no, please feel agree to disagree.
100% agreed with you. And I'll tell you another thing, that so much of selling which was there, most of it all has got absorbed. When did you see 20,000 crore sell in 2 days and the market down 3%? So it's telling you the broader market refuses to budge. The earnings, I think, from Federal Bank, Indus Bank, now all take it with a pinch of salt. There will be little bit of ups and downs because of the deposit. But HDFC is not compromising deposit at the sake of margins. That is the big standout, and that standout should remain. It is in realm with global peers. It is now a global bank, and there is no question that there will be global players who will be even more adamant with it. So I think at 1450, 1470, it's the best place to buy if you have a 2-year view. In the short run, we think everything is oversold on the bank Nifty particularly, and that could be the ride up. I'll also allude to one bank which I told you is mid-cap small bank, which I think can be the darling of this year.
And it's going to be a critical day then when it comes to the Zee-Sony merger. Sanjeev, we understand that after that grace period had been extended, perhaps the fate on what is going to happen is also going to be decided soon. How have you read into this story? Because I know that you've been a pretty strong proponent that come what may, this deal is perhaps going to go through. So what's the take given where we're at the current juncture?
So Avanne, I think we'll see the unfolding. It's difficult to comment, but I think Goenka will relent and move off, and the merger will continue. Once you have the back of Goenka, this stock will be re-rated. Hopefully, keeping fingers crossed today, Goenka gives in, and it comes back to merger talks and the follow through of that. We think the Sony brand is undeniably going to make the biggest MNC media company, and I'm very, very bullish once this goes through.
Some stocks where the selling yesterday was high. ICICI Prudential Life, LT Mindtree, 10% down for LT Mindtree, 6% down for ICICI Prudential, and Nuresh, क्या हो रहा है? 10% down for LT Mindtree. Suddenly, it has fallen off the cliff.
So this should be the feature for this whole coming week, wherein we've gone through a 9 to 10 month period of rally, and now once the results do not come in favor, we'll see such 10% reactions. We saw it on a HDFC Bank, so seeing it on a LTI Mindtree is just another feature. So that's the reason I would like to be more defensive in this period, because any result reaction which is say the expectations, the results come down below expectations, the stock could go down 5-10%. So that's what's happening. And if you look at ICICI Pru, it has been a relative underperformer all through the bounce back of insurance companies. So SBI Life has been an outperformer in that case. LTI Mindtree, on the other hand, had moved up quite a bit going into this results. So that's a reaction which I did not expect. But for now, you don't want to get in to a trade before the results in this season specifically.
Sanjeev, I'm afraid it's been a short but sweet interaction, so I'm going to have to wrap it up because we've got lots lined up today on the show. In fact, we have the management joining in. This is of Dynamatic Technologies to talk about the pact that they've inked with Dassault. We've got Udayan Toby, who is Malhotra, the MD and CEO, now joining in. Thank you so much for taking time out. So this contract that you have signed with Dassault Aviation, can you share the contours of this deal in terms of the size, the deal, the nature? Is it an exclusive contract?
Well, as you know, we're already a tier one for a global sole supplier of what we produce. In fact, what you see here are production items for Airbus, where we are sole supplier of complex flight critical products. For Dassault, they are obviously chock-a-block full with global orders with the success of the Rafale and the success
Hi,
of their
Nikunj
Falcon.
also joining in. You know, I'm feeling so boring and old school sitting in the studio. What a fancy. This is what your warehouse? Where are you joining us from?
It's actually a manufacturing shop.
You want to switch the camera? Show us.
for-
Just show us what's there.
Yeah, why don't you give this to me and I will actually walk you around. These are flap track beams. These are things that bring the aircraft up and down. They're under the wings. These are the new doors we're making for the next generation Airbus A220. These are the emergency hatches. In this plant, you can see the Bell helicopter fuselage assemblies being built. And of course, it goes on. And then there are multiple other plants around here.
Nice,
Now,
nice.
the beauty of it is, so this is not a warehouse. All we've done is, because you're videotaping us live, we've switched
We are
off
live
or
actually.
requested.
So
we requested people to go. We've requested people to go silent for the next 10 minutes.
Nice.
Just so that you can talk to me.
No, so nice to see
actually,
that. I would love to come one of the days. Avanne's already sent me a text saying.
You can come anytime you like. Now, this is the most amazing new business jet. It's the Falcon 6X.
Okay,
it's a remarkable new business jet by the maker of the Rafale fighter. And we've received orders. You can see some nice signatures on it for major aerostructures. This is pieces of this aircraft, which actually signify Dassault's intent to manufacture deeper and bigger in India. So as you know, they've got the largest offset requirements out of India because of the sale of the Rafale aircraft. But
it
more
makes
than
me
that,
feel so proud. It's make me feel so proud that it's cutting edge, real high end, high precision manufacturing is actually happening in India, and how the manufacturing which we spoke about, which we've been talking about, that this is a renaissance of manufacturing. Those are live pictures, and this was not pre-planned. Trust me, I'm telling my viewers.
This was not a backdrop.
This is not pre-planned.
You asked me, I took the camera from the cameraman's hand and I walked around myself.
Exactly. So this is not pre-planned, folks. We just spur of the moment. The facility is looking so charming that we requested our guests to actually zoom in. Okay, why are you getting the orders? Why is that no other global company is getting the order? What are you doing so differently? Are you better in terms of delivery? Are you cheaper in terms of manufacturing?
So for 20 odd years, we were HAL's best supplier in India. We made 1/6 of the Sukhoi airframe. In the last 17, 18 years, as we globalized, we built ourselves as a global sole supplier to Airbus for flap track beam assemblies. 2 years ago, we won their highest award, their Global Sustainability Award. It's a global best of the best award. A few months ago, late last year, we won Boeing Supplier of the Year award. That's a global best of the best award. So these are one of all the global customers. We're also Bell Helicopter's best global supplier. So what we've done is, out of Bangalore, taking advantage of this very strong confluence of digital engineering and artisanal craftsmanship. Bangalore and Karnataka are very rich in these handicraft traditions. So we're able to train children of handicraft artisans to become world-class aerospace workers, and then infuse a digital fusion of. Can I get one of those digital tablets that our workers work with? If you can just bring one of those, I'll just show you. Again, this is unplanned based on your question. So I think what is happening is it's quite unique that at one time, in one place, you have handicraft artisans and you have high-end digital innovation happening at the same time in Bangalore, around Bangalore. And I think that ecosystem really helps us to do what we've done.
Give me a sense in terms of where FY 27 and 28 is headed, just to understand that,
So just to show you, so if you look normally across the world, you'll have digital paper models, which are blueprints where people work to. All our data is totally digital, including the manufacturing. So what happens is you've got these incredible hand skills, craftsman skills. Aircraft are built like Rolls-Royce cars, with a lot of engineering and a lot of craftsmanship. And what we've been able to do is infuse this fusion together here. Now, coming back to your question about 27, that's the right time frame to look at this business. We've taken the last decade to completely, and a lot of people, except our really long-term shareholders, are deep, who understand our business. We said, look, it's going to take a while. We need to stop. We need to stop growing. We need to transform ourselves from what was essentially an automotive business and convert it into this world-class aerospace business. It takes a decade. So we grew really fast for 2 decades, and then for 1 decade we were just going sideways. But what we're doing now is we're entering that second growth, the second, let's say, the new S curve for us, where we are really going to grow on the back of global aerospace demand, using the best value of low cost, highly skilled human talent in India, and a very good global market.
Self-inviting myself. Before I return formal invitation, I'm self-inviting myself. It's like I'm feeling like a kid in a candy store when I see such things. I would love to understand and see the technologies. And that's the point I just want to bring out about our viewers, that the reason why the manufacturing sector is doing well is like, look at the good work which is happening. I mean, we are talking about cutting edge technology, precision in terms of manufacturing. That is what the real new India is. So thank you very much for joining us, and thank you for giving us a tour. I promise our viewers that it was completely not planned, but what a manufacturing unit you have. Congratulations, sir. And I'm coming there soon.
Come here with your cameraman and we'll do a full walkthrough of our facility.
Lovely, lovely. Thank you very much. Sandeep Sabharwal is also ready. All he has to do is just sit in his car, take a U-turn and come, or perhaps walk to our studio. That invitation is on from 2 years now, and Sandeep Sabharwal refuses to come to the studio. See, we are invited by manufacturing companies to come to Bangalore and visit the plants. And I'm extending an open invitation to join us at studio for the morning show, which is like half a kilometer away. Kab aayenge?
I'm happy to go to this factory visit with you.
But I'm talking about my invitation that you should come to the studio. And you know, if I just share with our viewers that what is the distance, the compound where we are in, the adjacent building is where he lives. Next gali mein. Galat to nahi bol raha hu.
Yeah, but you set up that wall now.
Markets always climb the wall of worry, Sandeep. You should climb that wall now. It's very rare that Sandeep Sabharwal becomes speechless, but today I managed to convince him. He's speechless for a change. वो rare moment है, right, Nuresh? Sandeep speechless होता नहीं है कभी.
Yeah, so there are way too many walls of worries in between, I think.
Sandeep, what about the market? I mean, it's the other way around, right? Markets went up, ignored all the worries, and now the reality is just dawning on us. It's the other way around.
So I think what the reality, what is dawning on is that the results which were expected might not be as good as what people were expecting. And that's what we've seen with the large cap technology results, which excited a lot of people. But I think there are worries out there, and next year will not be as good as what people expect. Then we had insurance companies which also disappointed, and HDFC Bank. Now, IndusInd Bank results were slightly different from HDFC Bank, that they were able to maintain their name. But then there is some stress on the balance sheet, so they use their contingency reserves to show better results. So the markets overall are priced in a sense. So we need some sort of value correction, some sort of time correction for the markets can become healthy overall for patient needs.
I saw your tweet. Everyone is asking me at what level to buy HDFC Bank. That's a right question. I mean, the numbers were not that bad. So while we can say that that is the indicator where appetite is still there, the bulls are still happy to buy HDFC Bank. But is that a reasonable question to ask at 1480? The stock has done nothing in last 3 years. Numbers are not that bad and it's got punctured yet. That at what level to buy HDFC Bank?
No, it's not a wrong question, but the whole point is that if you are already loaded on with HDFC Bank, why do you want to keep on buying the same stock again and again and it make it an unwieldy part of your portfolio? So if you don't have HDFC Bank, then it might be a right question. And to that extent, another 10 to 12% down might be a good level to buy the stock. But if you already have so much, then it's a wide open market. There are so many other stocks. Why do you want to buy only one bank, one stock, where much of the distinguishing features which it had vis-a-vis other banks is no longer exists?
Okay. I just want to look at the FI data now. A point which I think we discussed on 2nd or 3rd of Jan, and YTD data, which is month-to-date data also. But compare that number with what we've seen in November and December. November 3,800 crore, December 3,100 crore, and month-to-date already negative 19,000 crore. And Sandeep, this is a big departure from what everyone assumed. The consensus view was 2024 FIs will come. They will come aggressively, allocations will increase, and there could be a FOMO from FIs which will force stock prices to go higher. The reverse is happening.
So for long-term investors, this reverse is good. So we don't want a bubble to build up to such a big level from where there is a big crash. So we are at levels where a moderate correction will lead the markets to come back to reasonable levels. And what we are seeing has two parts. One, record high valuations of India vis-a-vis the rest of the emerging basket. And the second is the overall non-performance of the emerging market basket, which is leading to outflows from ETFs. And this could continue for some more time.
Sandeep, morning. Let's also get in your take as to what the expectation is from heavyweight Reliance Industries. It won't be the reaction that we'll see play out on Monday this time around, Saturday itself, but what is it that you're expecting?
So this time expectations are low from the oil to chemical business, retail business, telecom business. So most of the businesses this time the expectation is not too high. The key to watch in Reliance always from my perspective is what is the kind of fresh investments they do. Are they generating any free cash flow, etc. And which is the biggest reason why the stock has not performed. Because back in 2020, they made a statement they'll go debt free. Then they started on a new capex cycle, so which obviously impacts the return ratios and the performance of the stock price. And I think that will be critical for Reliance over the next 1 or 2 years.
The last month or so, have you profit taken anywhere in your mid or small cap holdings?
So a lot of the small and mid caps, we don't see longer term concerns, so not too much. But we are maintaining around 15 to 20% cash to deploy on downturns.
Meantime, we'll also be watching out for some critical numbers coming out tomorrow. There's Kotak Bank as well as an ICICI Bank that will be coming out with their numbers. So that as well will be closely watched out for by the street. What's happening when it comes to the pre-open rates right now? Well, owing to the fact that, by the way, it was a fairly healthy handover from Wall Street, Asia as well for the most part was in the green. For now, it's 1.5% nearly on the Nifty, and for the Sensex as well holding out in the green. Given the movement that we've seen over the past couple of trading days, I'm sure this will be fairly comforting. Kunal, your mid-cap trades?
Well, yeah, from the mid-cap arena, I would bet on Som Distilleries. That's a stock which has been, I think, correcting around 30% from the last 2 or 3 months high of around 385, 395 for the stock, came down to sub 300 levels. Now, in the last 3-4 days, there has been excellent change in terms of the volume patterns, the stock taking support at 200 moving average and now inching back above that 300 level. So, it's just a buy with target of 330 and stop us at 290.
Right, Naresh, what about your strategies?
So that would be a buy on IRB Infra. The stock has given a breakout before and now consolidating, making a flag formation, showed a lot of relative strength yesterday. Even when the markets were correcting, did not see any fall. Expecting further move up towards the 55 mark. Stop loss now at 44.
Well, early morning you're recommending a liquor stock.
Friday.
So, कल market चालू है. वही तो बता रहा हूँ इसलिए. Markets are on tomorrow.
But I'm a teetotaler anyways.
Okay. So technical breakout, nothing.
So is Nikunj.
Yeah. Boost is the secret of managing one of those. Okay. The pre-open rates are indicating that 288 points up for Nifty. These are pre-open rates. They will settle down. I don't think we are in for that kind of a gap up start. HDFC ADR was up, so that I think is a reasonable assumption there where markets would open. Sandeep, in general, is it time now to take some serious money off the table in PSUs? Because if the market mood is nervous, if there is leverage reversal, then that's one space which fundamentally and technically was overbought and fundamentally was frothy.
It's frothy because people are getting into PSU stocks irrespective of valuations, and they have become sort of meme stocks. You look at the charts of many of these stocks, it's like a cliff. And when you climb a cliff, typically the fall also is big and drastic and can be very sharp. We saw a similar thing in IRCTC, IEX couple of years back, and the same could repeat in many other stocks this year.
Okay, insurance is one space where I just want to look at names where the market reaction has been very, very magnified. First, we've spoken about HDFC Bank, let's keep it out. Polycab, let's look at, you saw a very sharpish kind of a reaction even in ICICI Pru Life, LT Mindtree, let's look at some of those stocks. So, ADR is up, pre-open rate, the stock had to bounce back, it is bouncing back. I think it will find its feet sooner than later. But everyone is, in a sense, swimming in this stock. So I don't think the appetite to really buy fresh or buy large is going to come back in a hurry for HDFC Bank. ICICI Pru Life seems to be bouncing back. L&T Mindtree seems to be bouncing back. Stocks in focus today, it will be IndusInd Bank and Metro Shoes. Sandeep, we are getting now signs of what could be called as slowdown. There's a slowdown which Metro Shoes has declared. There's a slowdown which some of the internet companies are indicating that consumer is slowing down. So is that one pocket which is called as the urban luxury consumption or the luxury consumption? Is that pocket now in for some bumpy ride aheads?
Yes, so the bumpy ride has been continuing. Now, some of these stocks held on and did not correct because I think they kept on pumping inventory in, and whereas the other companies stopped doing that. So that's why we see some disparate results in this quarter. But the consumption slowdown is a reality. And when it will bottom is tough to say. But normally it tends to bottom once inflation gets stabilized and then there's a pickup. So hopefully from this quarter we see some signs of a pickup which could continue into 2024.
Thanks so much, Sandeep, for joining in, and hope you have a good weekend. Maybe not tomorrow. Maybe it'll start tomorrow afternoon.
Coming tomorrow. Hello, Sandeep. I hope you block the calendar early morning. Pre-open session with Sandeep Sabharwal.
I refuse to do anything tomorrow.
But markets are open. Markets are open tomorrow. Okay, so coming to studio then. So choose. Studio
I'll
or
ignore the market.
Well, just in case you change your mind, the pre-open begins at 9 a.m. tomorrow. Pre-open is going to end at 9:08. The normal market open time is 9:15 and closing time is 10 a.m. Then, of course, there's going to be a second trading session as well, wherein the pre-open session is going to begin at 11:15. Market opens at 11:30. Close time is going to be 12:30. The closing session will begin at 12:40 and closing session ends at 12:50 p.m. So it's going to be a working day for all practical purposes. But yeah, lots happening outside the world of markets as well. Let's tell you a little bit about that. And amid increasing distressing news concerning students in the country, the centre has moved to regulate coaching centres now. The new rules make it mandatory for coaching centres to register with the government and also ban admissions of students below 16 years of age. Also closer home, a school picnic turned into a tragedy on Thursday as 14 people, 12 school children and 2 teachers died after a boat carrying over 20 children and several adults overturned in a lake in Gujarat's Vadodara. According to the local administration, 27 students along with their teachers were on board when the boat capsized. Search operations are currently underway.
Meantime, severe cold conditions continue to hit the national capital with the minimum temperature in low single digits, dense fog visibility as well. The Met Department has issued a yellow alert for the region till the 20th of Jan. Meanwhile, flight and train operations continue to remain affected in and around Delhi. Meantime, Christopher Nolan's Oppenheimer has led this year's BAFTA Film Award nominations with a total of 13 categories. The Oppenheimer summer box office rival Barbie has received 5 nominations, level with the cult hit drama Saltburn. Nolan's 3-hour epic Oppenheimer, which has already won the Critics' Choice Award and 5 Golden Globes, is up for Best Film, Director, Adapted Screenplay, among others.